The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 21st, or maybe 22nd, or maybe even the 23rd. Well, we're going to call it the Thanksgiving Day edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, really, more importantly, the most important thing is that I'm here for you. Yeah. So all you have to do is give us a call at 877-927-6648. If you can't do that, let your fingers do the walking. Go ahead and send me an email, steve@tfnn.com. In the subject heading, just put radio show question. Let me know what it is you'd like me to look at, maybe answer for you, assist you with. Would be happy to do that, of course, in the Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on, well, it is Wonderful Wednesday, soon to be Terrific Thursday, and, of course, Fantastic Friday just around the corner. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 183 points, 24,649 is the print. S&P's up 26. NASDAQ 100 is up 1.5%. That's 101 points. The Russell 2000 up nearly 2%, 27 points the upside. So we've got things to look at. What you want to look at here, I would say, by day's end, one of the things, we're going to go through an entire list of those. But one of those things you'll want to take a look at is spot volatility index. Right now, down $2.19. That's 9.74% to the downside, one-day rate of change. If you get a closing that takes you to minus 10% or lower, so beneath minus 10%, then what you have, or what you should have, is what's called an initiation day. An initiation day that would send prices higher. Now, that's what the spot volatility index signal would be. What happens if you don't get a minus 10% or less? Well, then you just don't have that definitive message. Doesn't mean markets can't go higher or lower, just you don't have that one definitive message out there. So that's one thing. It's trading at 2030. Somebody could probably do the math for me and tell me what that number is. It's probably like 2024 or something like that. I don't know what the exact number is, but you can figure that out. So that's the first thing I would say that you'll want to take a look at out there. And then, of course, if you do get that, you'll know on Friday. We won't be coming to you live on Friday. This show, I'm sure, will be playing at some point in time in the queue. Maybe it's even during the 1 to 2 slot, as well as playing on Thanksgiving. So today I want to cover certainly the things you want to look at, and then with the available time that's left, we'll certainly take a look at the bigger picture so that I provide you with data, numbers, things to take a look at, maybe even to assist you with the markets are or are not doing come Friday. How's that sound? Yeah, should sound pretty good. Okay, so that's the first thing out there. Lead the charge, by the way, to the upside today. You've got Amazon up $35, Booking Holdings 25, AutoZone 23, Google up 21, Vail Resorts up 11, Chipotle up 11. To the downside, you've got Tesla off nearly $6, Johnson & Johnson off 5, that's about 3%, Nvidia down to $4. So the rest of them are mostly ETFs out there. So we won't spend much time on those. Let's go to the first question, though, and then we'll go back to the markets. And that was coming from Ruby in the Tiger's Den. Wanted to buy cocoa. And, hey, you can't blame her. It is that time of the year. Many of you may be even sipping on a little bit of cocoa. Down here in Florida, more likely a cold beverage versus cocoa. But nonetheless, if we take a look at cocoa, what Ruby's looking for is a bottom. And Ruby, all that we can say a number of things, but one of the things that we can do is look at 4 different time frames: weekly, daily, 240 minutes, so a 4-hour time frame, and a 60-minute time frame. And what you'll see on this chart here are nothing but red bars, red shoots, with prices below support level, or identified support, being the bottom of those TAS market profiles. So there's no support, visible support that we can see. We can see that cocoa on a daily basis is trading below the 0.618 retracement. So Fibonacci numbers are something else that we can take a look at. The 0.786 level doesn't mean price will stop there. It's about 2093. But more likely than not, and if it doesn't stop there, you're going to see 100% move, or you should. Meaning getting back to the swing point low from the trading day of October the 1st out there. So at this stage of the game, it looks to me like that is where cocoa is headed to. If it was going to find support, and we were going to find some visible support out here, it would be this red dashed line. So the other area to watch, this would be invisible to most, not to you, because you'd be taking a look at that Tom DeMark setup 9 count. That's what actually identified the most recent high in cocoa out here. And the beginning of that count, which actually began on October 25th, it is that low that is a hidden, not to you, but to many out there, key level of support. So price is trading back to support. Not good enough, in my opinion, for you to go ahead and take some type of a long trade. And if it gets below that, well, then you just simply have an additional piece of information that says likely here to back into that October 1st time frame. So I hope that helps you out with a cocoa, as somebody put in there, for Cocoa Puffs. Okay, let's go back to the markets. We'll just kind of shift around again until I get some other questions, because your question is very important. We were talking about, or I was speaking about, the spot volatility index. The next thing, and just trying to line that up with what is the market doing, you're just trying to sense what the market is doing. What you would also then be looking for, because it would be a killer combo, would be for price in the ES mini to close above the bottom of its profile. Now, that was tested yesterday. Well, it was tested 3 days ago, 3 or 4 days ago, and it held. And I'm referring actually to the weekly profile. So the end of the week is Friday, of course, out here. But we won't be doing this show live, so we won't be able to report back to you. Hey, guess what? It was tested and it held. That, of course, being the bottom of the box. 2671, and go with 3 ticks 75 out there. Right now, the actual high that we have seen today is 2671.25. So if you are in the short mind out there, that's where you would be firing away, because old support could be new resistance. However, if price closes over a level, just call it 2672, just round up, just make it easy for you, then you're back inside the box. Not Jack in the Box, inside the market profile box out there. And then price could easily run at 2695, 2736-ish would be the area. So take a look at that. Take a look at that one-day rate of change to assist you in identifying what the market is likely going to do on Friday. Yeah. It is that simple, or at least we make it that simple for you here each day between 1 and 2 at TFNN.com on the Trader's Edge. I'm Steve Rhodes. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-76.
Welcome back, folks. So I've been chatting back and forth here with Kay, and Kay just sent me an email that was really talking about Apple, and I apologize, Kay, I don't completely get the email, but really with regard to Apple entering a bear market and so on and so forth. Here's what I want you to pay. Well, first, let's take a look at the Apple set of charts out here, because that's one thing we didn't share back and forth. So let's take a look at Apple, and let's take a look at its monthly time frame. And the reason why I want to do that, we've got the end of the month coming next week, obviously. Well, maybe not obvious, but we do have the end of the month coming next week. If we look for support out here, we're below the daily profiles and weekly profiles, so those levels aren't out there. Old support would be resistance, in this case here on a daily time frame, 188.35 out here. The bottom of the monthly profile is 167.91. That may be the target, out here. Here's what I'm going to suggest that you watch for, certainly on Friday and then really on Monday. So Monday, if you remind me, we can take a look at it. We can see that when Apple made a high out here, it did it with one of those Tom Newmark set up 9 counts. Now, you might take a look and see that the 8 count, which was on the trading day of October 3rd, was actually the high. The way that the system works is that when you get to that 9th count, and by count, folks, I'm talking about in this case here with price moving higher, where the close of each session is above the close of the session 4 bars prior. So that's all you really have to do out there. That means all of you home gamers on a daily chart, it becomes easy to go ahead and track the 9 count out there. You can read the book, get all confused, but we're just trying to simplify it here. Now, when you get to that 9th count, typically you will see one of 3 things take place. One would be a change of trend. And if it's a change in trend, it either occurs on the 9th count, the day before, or the day after. Well, in this case here for Apple, happened to be the day before on count number 8. The other couple of options are the market moves sideways. There's this little hiccup. But let's focus here on the fact that today is going to be, or should be, an 8 count. Now, 7 was the lower low from yesterday, at least as far as today is concerned. Maybe Apple moves a little bit lower on Friday. I don't know if it does or it doesn't. It doesn't even have to move lower in order to make it to that 9th count out there. But it certainly worked at the previous high. Maybe it's going to work down here at the low. So pay attention. Again, to the downside, you're looking for a close on each bar that is below the close of the bar 4 bars earlier. I know you say, how can you say that, Steve-O? You haven't even had a drink. It's just very easy to say when you finally figure it out. So I would be paying attention to that for the good old Apple care. That's if you care out there. Let's go take a look at other things to be watching inside of the markets out here. I don't see any other questions, by the way. If you've got a question, though, give us a call at 877-927-6648. Send me an email, steve@tfnn.com, or certainly any ping inside the Tiger's Den. So the New York Stock Exchange is something else to be watching. The reason why you want to watch it is because so far what we would say today is, both by the mere fact that we haven't seen a minus 10% one-day rate of change yet in the spot volatility index, and price tested the bottom of the weekly profile for the ES, and the fact that the advanced decline oscillator reading is still below 0, although slightly so. You'll see the reading on my screen says minus 12. If it gets above 0, then it's like a football game, and it would be that the sellers fumbled the ball on Wednesday. A close above 0. Getting just up towards the 0 level can easily turn back down. What it really means is that the sellers are still in control of the market. Yes, a nice bounce right now. Of course, these are end-of-the-day readings that you want to be paying attention to. But right now, it is nothing more than a nice little counter-trend rally out here. At least that's what this message is. How many advancing, declining, net advancing issues does it need? I can go calculate that, but I don't have it off the top of my head. I can let you know we are at 1,782 net advancing issues right now, so it needs more than that. It probably needs around 1,850, something along those lines. Now, it can accomplish this on Friday as well, but we're just giving you what the read is as we speak right now. Maybe during the next break, I'll just do the quick math on that and be able to give you that number, because you can find that number out. It's just you can find it out. You can calculate it, is what I should say, and that way, and you can find what I meant. You could find out is you can pretty much find out what the net advancing issues are. So I'm going to try to do that. I see a question inside the Tiger's Den. It looks like a question. So, yes, it says Q with a question mark. That should be the sign for Stevie that was a question. The question goes like this. The ES Mini 2675 was the low from November 15th. 2671.25 was the high from today. How significant is that for me out here? So, great question. I would say that, let's just come back over here to this, what is referring to the November 15th low. And so for me, Mr. Z, in essence, that November 15th low is very significant. Now, the reason that it's significant, not so much the fact that it was a low, but the fact that it held the weekly task market profile. So again, that weekly task market profile number was 2671. It says 80 cents, so you know that's just really 3 ticks, 75. That's a level of support. That was 2671.25. You're absolutely correct. The high today, 2671.25. So it's significant. And what I said, maybe you didn't catch it. Maybe I said it so quickly. Nobody caught it out there. If you were of the short-minded, if you were short-minded, I don't mean short-minded, I mean short from the trading stance, then that was the place to fire away, because that is old support that now may be new resistance. So that's the key level. I close above that. What that says to me is the ES Mini heads higher. Heads higher to where? Well, 26.95. That could be an easy spot. And 27.40, 27.36 could be another spot out there. So, yeah, it's put that together with the one-day rate of change in the spot volatility index. I would say this. A close above 26.71.75 and a one-day rate of change below minus 10% on Friday. Expect that the markets will go ahead and trade higher out there. How much higher, I don't know, but they will be set up to continue to move higher because they will have taken out a level of pièce de résistance. By the way, the mathematical number, I was able to do this simultaneously. I know, it even freaks me out. The number you're looking for is 1999. Net advancing issues would get it to 0. And I said we were at what? What did I say? Well, what are we at right now? 1760 out there. So about 2,000 net advancing issues will get you over the 0 line out there. The other things perhaps to be taken a look at, as long as we were over taking a look at that page out here, was the other equity futures contracts. What signals would they be sending to us? Because you've had a nice move inside the Russell 2000, no doubt about it. But it's still below its old support line. 1512 is the number you need to see it close above. And in the case of the NQ, it's 6706. It's 126, the day before Thanksgiving. If you're traveling, be safe out there, of course. Why wouldn't you be safe? But just make sure that you're safe. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks, and happy Thanksgiving to everybody listening in. Let's go to one of our email questions out here. This one coming from CJ. Of course, CJ and I are good friends. I think we're good friends now. He sent me an email. But it's for Charles J. out here. And Charles asked the question, hey, Steve, when the markets turn to the upside, where do you see the strongest moves upward? Thanks, Charlie. Now, Charlie, I've got to read a lot into your question. So I hope I'm going to answer it. I may not answer it the way you want because I might not be answering your question, but I'm going to try to answer your question. I think you're just asking me where is it that you think we might see the strongest moves upward, which is really what you asked out there. It's always hard to say. Here's what I would do. Here's what I will do for you. What we will do is just take a look at the U.S. indices, or the core of the U.S. indices out here. Forget about the bottom pace. And what this chart is doing, Charles, it's taking a look at the daily and some weekly numbers out here. But we're looking at the S&P, the Dow, the NASDAQ, the Russell, the semis, the transports, well, you can't trade the composite or the New York Stock Exchange or the Wilshire, but it does provide you with that data. What I'm really focused on here are the indices that right now have the strongest bullish message. Okay, so if I'm answering your question correctly, those would be the indices that are trading above their daily Stevie red line. On my screen here, the column says daily OUL, stands for oscillator unchanged. So that includes right now, and the number is 1493.19. We're at 1494 in the Russell 2000 equity futures contract. The cash indice, we're at 1493, and 1492 is the number. So we're just teetering. We're just above that level. But being above that level says that you at least have a rising price oscillator. So it would be a candidate for you to look at. The semiconductor index, that number, we're trading 1188. Its Stevie Redline number is 1182. As long as price stays above that, that would be another candidate for you to look at. The transports are trading at 10,395. We're at 10,328. Probably the transports. I mean, let's face it. We're in the fourth quarter. The transports, this is when FedEx, UP, we're in their wheelhouse out here. So this is when they would normally do the best. Those are the indices that have the strongest, what we'll call bullish message, if we just use Stevie's red line. So I hope that that answers your question out there. And if I didn't answer it the way you were looking for, well, CJ, because you and I are good friends now, just write me back and I'll try to get right to it. So thanks for writing in. Bob Y, that would be BY. So we must also be pretty good friends. He says, hey, Steve, great show. Well, we're even better friends because it's such a great show. Well, thanks for listening. Can I get your take on nat gas and Nordic American tankers out here? So if we go take a look at natural gas, we will just simply defer to our natural gas expert, our wingman, and that's Mr. Z inside the Tiger's Den. But nonetheless, because he's just in the den, he's not live in my ear right now, we're just going to have to go take a look at nat gas out here. And if we do that, what we are looking at, let's see if we can figure out on a weekly time frame where this might be headed to as we pull this back. So what natural gas has done, in essence, at this stage here, Bob, is it's made that 100% move of a move, meaning getting back to a prior swing point. That swing point taking us back into June of 2014. If price can clear that level, this is a weekly time frame chart that we're looking at, well, the eventual target would be the highs out here, the prior swing points. Now, look, there's some swing points out here in around the 553-ish area. But above that, then there is no resistance, no visible resistance for you and I to take a look at. And therefore, the target would take you back into the April 11, 2011 time frame, and that's up in the 765-ish type area. You're trading at 451 as we speak right now. That's looking at the long term. If we take a look at what's going on a shorter term time frame out here, maybe nat gas is going to pull back to about 437. I say maybe because we're looking at the 4-hour time frame, bearish structured box, prices with inside it. It's below the center line of the box, which is 485. So it is sellers that are in control of this area here on the 4-hour time frame. And therefore, we would look to the bottom of that box for a level of support. It would be about $4.37 out here. It would make sense that that is where price is going to pull back to, because on the 1-hour time frame chart, you can see the bar is red. It says sellers are, in essence, in control. Price is below the bottom of the box. So it does look like a bit of a pullback. To try to go to pullback levels on the daily and the weekly, they're so far down below. Not that they can't get there, but they are so far down below. That's in the 380 range. We just simply won't go there. So that's one thing you wanted to look at. The second thing you wanted to look at was Nordic tankers out there, right? That's what you Nordic American tankers. And if we take a look at Nordic American tankers out here on the daily, weekly, and the monthly time frame, from a monthly standpoint, you're right up at resistance out here. So the question for you, what you're going to be watching for, what you're going to try to identify come next Friday, is does Nordic American tankers close above the top of its monthly profile, 303? Your trade right now at 302. I don't know the answer to that. If price does close over that level out here, well, it's possible Nordic American Tankers is going to set up an A to B equals CD to the upside. Yeah, it is just that simple out there. And that A to B equals CD, let's just use the weekly time frame chart out here. Let's just do that. That A to B equals CD would give you a price objective of approximately... Well, that didn't work very well. Let's see if Steve-O can actually do this here. There you go. Okay, he's got the A, he's got the B. Now comes the old C. That would give you a price point objective of about 431 to 472. You're up at resistance right now, longer-term resistance out here. I'm going to suggest BY, Bob, to just sit tight. Just sit tight. Sit tight on Nordic American tankers. All right, thanks so much for writing in, and happy Thanksgiving to you. We've got PL's got the question. Well, I like this. Percy L's got the question here. Says, Steve, can we look at the Russell 2000 equity futures contract? We sort of did that. Oh, RTH, I take that back. PBE, IBUY. Hey, that's a threefer out here. I think we can do it. I think we can pull it off. RTH. I'm along these three right now. Would like to know what the weekly, daily profiles and the oscillator and change line are telling us. That is asking a lot out there, but it's Thanksgiving, and so you get to ring the bell. Oh, we don't like the retail ETF sector. You're in this thing. Long term? Is it long term? Short term? It can't be short term. Well, it could be anything you want. What does it look like to us? It looks like maybe the pullback. Maybe if you're lucky out here, this pulls back to the monthly level of its its monthly profile, kind of like Apple. That would be 93.99. About the worst thing that could happen for you is a close below 93.99 out there. If I look at the daily time frame, which we are looking at right now, it's got the potential for an A to B equals CD to the downside. I mean, you asked for the OUL, that's 102.18 on a daily time frame. You don't see this on this chart. It did create an A to B equals CD yesterday. It did it with a gap to the downside. Always a tough one there, because you don't like to come into that D point with a wide-ranging bar, and that's in essence what a gap is out there. So it could find some support right here. You need to see some type of bullish reversal signal, and then certainly a close above Steve B's red line. But right now, it's a bit iffy out there. Percy, we'll go take a look at PBE and IBUY when we get back to the screen.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-320 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Happy Thanksgiving to everyone out there. Let's take a look at PB&E. That's the Invesco Dynamic Biotech and Genome ETF out there. And what I can share with you, Bob, is I like this one better than I do the retail sector that we took a look at. The reason why I like this a bit better is if we put up Stevie's Ninja Trader chart, a few days ago, you had that nice Rhodes momentum indicator bottom signal, and it generated that nice piercing candle. It was a bullish reversal signal. That was one of the steps, one of the key steps in this pattern. The very next day, November 17th, price closed above Stevie's red line. Came back yesterday and the day before. Today, you're slightly above it. So this has better possibilities of having formed a bottom out here. I think that's the only pattern that I see. If we do wave counts, yeah, you're really just in wave, not that it's bad, wave number 6 out there, but staying above 49.92. Again, short term, I'm taking a look at a daily time frame, would be short term bullish. The weekly chart, the bottom of its box is 50.33. The monthly, it's below the bottom, which is 52.08, but that can be overcome by next Friday. I like this as a better bottoming signal type of trade out here, a trader investment. So I like this one. The third one that you had was IBUY. Let's take a quick peek at IBUY. Now, the difference between IBUY, that is the Amplify Online Retail ETF out here, this one has some potential, but the potential is it needs to close above Stevie's red line. So it's got that Rhodes momentum indicator bottom signal. What it doesn't have, as we speak right now, it doesn't have a close above Stevie's red line. That is 42.72. Today, it's acted as resistance. What you would like to also see is for this thing to get about 44.41 out there. It's not a guarantee. It's not like it's a slam dunk, even if all those things happen, but at least it is much better looking than the retail holders ETF, I believe, that we took a look at. Doing the wave counts on this one, well, yeah, you did get to wave number 7, had a nice little rally out there. So you could have some pretty significant resistance to the 47-ish area out there. So that was for Bob Y, I believe that's who it was for. No, that was for Percy. That was for Percy. And so thanks for writing in. Much appreciated, and happy Thanksgiving to you. Maria writes in. Maria says, good afternoon, Steve. Good afternoon. Could you evaluate Keys, Keysight Technology, Keys? And so let's go do that. And at the same time that we are doing that, Keys, let me punch it in on my other system. Could you evaluate Keys? I currently hold the stock for longer-term trade, 6 months or so. Do you think this will retest the lows of yesterday? So let's go take a look at what this is doing. So this in Keys, Keys being the ticker symbol out here, again, also making one of those Rhodes momentum indicator signals. Now, this is nice because it did gap to the upside. So that is a bullish reversal candle at the completion of that pattern. What you would like to see, Marie, I saw her, would you like to see is price stay above 56.68, Stevie's red line number. To answer your question, you asked, will price go retest the lows of yesterday? If price falls back below Stevie's red line, 56.67 right now, so got to give it a few pennies out there, then the answer is you probably, because you would have a falling price oscillator below zero, you're back below Stevie's red line, and then, yeah, it could easily go test, whether it's the high of yesterday or the low of yesterday, it should go test yesterday out there. Right now, you have a rising window. You have a gap to the upside. Gaps are your friends. This thing may have bottomed. 61 bucks is where you're going to get a counter trend rally to. If it did, maybe even 62, 63. That'd be the next key level that KEYS would need to take out. I hope that helps you out. And that is for Marie B. Happy Thanksgiving to you as well. We've got another question here. This one coming from Eddie. Eddie says, how do you think the market will react in anticipation of Black Friday? What? I'm just kidding. Right now it's up, but do you think that we can have a continuation of the bounce this afternoon and on Friday into Monday if retail sales are good? Also, could the market continue to rally into next week in anticipation of Trump making some headway with China in the G20? They're supposed to be meeting next Friday. Happy Thanksgiving. Thanks for being there for all of us. Hey, you're welcome. The Trumpster, he's in town. I dislike it when he's in town because the traffic getting to some of the places that I go to are just so much more difficult. They pretty much, they lock. Mar-a-Lago is in about the best place, but then the worst place when the guy's in town because of just getting back and forth to places out there. But that wasn't your question, so don't get offline. Eddie, the easiest way that I can answer your question would be today's activity, if you get a spot volatility index with a one-day rate of change of minus 10% or lower, then your odds increase that on Friday you're going to see an update. Just simple, as if like the market knows. Now, it doesn't if that doesn't happen, it doesn't mean we won't. I'm just trying to improve your odds in answering that question. And then it goes back to the ES Mini. If it closes above the weekly profile, and that is, again, 2672 is what we're going to call it, then it closes above that today, your odds improve that you're going to see an update on Friday. It doesn't mean you can't if those things don't happen. It's just those are kind of our lines of demarcation. If we, that's how I would really be looking at it. If those things don't happen, then I just have to say, well, we don't know. But what we do know is that at this stage here is nothing more than a counter-turn rally, and it's kind of like maybe a coin toss out there. I wish I could provide you with more defining information, but the defining information right now is if price stays below old support, which is now resistance, you don't have a clear signal of a move to the upside, and you would just simply have to call today a counter-trend rally. Now, there are other things out there that would suggest, well, maybe that's not the case. Steve-O, not so fast. Okay, well, what the Sam heck is that? The indice that has gotten the schnot kicked out of it. I don't even know if I can say schnot, but I just did twice already. That is giving the biggest bullish sign out here is the NASDAQ 100. Now, I've got the NQ up here. We could put up the NASDAQ 100. We could see the same thing. This thing has got bottom patterns galore out here to the downside. Galore. And it's got an A to B equals CD to downside. It's got a Rhodes momentum indicator signal. It's got a 3 drive to a bottom. I don't know. What else does it have out here? And today, so far, a piercing candle, bullish reversal signal. What it doesn't have is a close above Stevie's red line. And so 67.31, if the market does bounce, continue to move higher, maybe was a bottom come Friday. What's 67.31, that around that area inside the NQ? If you get above that, then what you should see is a move all the way back to its recent highs out here. And that would be into the November, what was it, November the 8th. Would be your price target area, 71.47, 7,200, somewhere around there. So, Eddie, I hope that helps you out because it's the best information I can provide you with at this stage of the game. And thank you for being there for us. And happy Thanksgiving to you. So we'll get back from this breakout here. We'll try to answer what looks like our last question from CM Chris. And we'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
So last question coming from Chris M. in Washington, D.C. out there where my youngest lives and his billion building, the Eisenhower exhibit on the mall out there. Pretty cool. Okay, Chris's question, let's get to it because we got 2 minutes here. And it's the most important question. Really, it's really looking for the big picture. Chris is a new investor out there, and he's trying to understand with regard to his long-term retirement portfolio, his IRA, what should he do? Should he just go ahead and buy a percentage right now and just stay long? And I'd say you absolutely can. If you have a longer term outlook, then yeah, you can put some money into that right now. Here's the chart that I want you to first pay attention to, Chris, and that is, this is the Dow broken down between how it's priced in dollars, euros, yen, and Great British pounds. Now, Stevie will help you along with this. I will tell you that this is the most important chart, or any chart you look at. You must know what the other trader is doing. You've got to know what your competition is doing. You would not run a successful business without understanding what your competition is doing. You would not play. You're looking for information. You have to know what those other traders are doing. By the way, the pullback in the Dow in terms of pounds and euros has been nothing more than a retest of the old breakout area of its consolidation, whereas in U.S. dollars, Chris, there's always the possibility that Dow is going to pull back into the 23,360 level. So yeah, you can put some in now, save it to see if price pulls back to 23,360 to fire away. The other option is if you see a monthly close above 26,616, you're going to see a huge move to the upside longer term. Folks, it's always about understanding where the global flow of capital is going. If you look at this chart, the Dow is just in a consolidation. Every other country is trading below that consolidation level in a descending trend out here. The money is coming into the U.S. Why? Because of people like you. Because of people like you celebrating Thanksgiving. Because this is one heck of a place to live. So, Chris, invest in the USA. It's just that simple. And thanks for investing your time with us, folks. Have a great Thanksgiving. We'll look forward to seeing you back come Monday. Be safe out there. Don't eat too much. Actually, eat a bunch. Watch a bunch of football and have some great time with family and friends. Take care. We'll see you on Monday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.